Welcome to the Standard and Rich podcast, where finance meets fun. Join your hosts Danny Gallo and Jonathan Elkoubi as they navigate the complex world of finance with a touch of humor. Whether you're a seasoned investor or just starting out,
welcome back, guys, to the Standard and Rich podcast. This is your host, Jonathan Elkoubi, speaking, and I'm going to pass it right over to Danny. Tell us how your week was in the market.
It was a pretty nice week in the market. A lot of data came out last week. Obviously, Nvidia earnings. Everybody just waits for those earnings that came out last week. There's also data on a company that Berkshire Hathaway and Warren Buffett have been keeping secret with the SEC that finally came out. Could you talk a little bit more about it?
I actually wanted to talk about that. So yeah, Chubb's insurance company, they actually held this a secret from the public for 9 months. Warren Buffett worked with the SEC. Usually you have to report your holdings after 3 months, but he worked with them, so basically he didn't have to show it till recently, May 15th, where he actually released it. And what do you think about it? Do you think that's moral? You think it's okay just because he has a big name, he can do whatever he wants? Huh?
I think he'll get a little more leeway than just a normal investor. The thing I'm wondering is because he already owns Geico, so he already owns an insurance company. I'm wondering why he didn't disclose it, because maybe he's taking a lot trying to think about taking Chubb's over. I don't know. He put $7 billion into it. I'm not sure what the market cap is.
6.7 billion. I think it's 100 billion market cap.
Okay, so he took a 7% position inside that 6.7% position, whatever. It's still a significant position, right? If it's 7%, that means he's going to get a lot of say. And knowing Buffett, he'll go more into it. Like Oxy, when you saw him start investing in Oxy, he didn't really stop, and he kept on growing and growing his position.
Yeah.
So maybe he wants to take Chubb's private, bring it in with Geico, try to bring competition to Progressive, because we know he's been talking a lot about Progressive, how they will run their firm pretty well. So I'm wondering if that's the reason why he didn't talk about it.
I don't think that's the reason he hid it. I think he just wanted to increase his position, because when you have so much money, it's hard to put it into a company without boosting the stock price so much. Like if he just put the $6 billion in right away, it would have boosted it. The stock price would have shot up, and it would have been obvious that some huge whale is buying. But he spreads it out, obviously, so it looks like nothing's happening, and he had to spread it out over a long period of time. And I think you're right. He's going to continue buying the company. As time goes on, he's going to continue buying a bigger stake into the company. But basically, I think he's buying it. I don't think he's buying it to take it over. I think he's buying it because it's a cheap P right now. It's 11.4, and it's lower than its 5-year average. The 5-year average P is 15. So historically, it's undervalued. And they have a pretty good 1% dividend with a 15% payout. So overall, I think he's undervalued right now, and he's going to pick it up for a good price. And he's going to ride the wave.
That would make sense for him not wanting... Well, at the same time, you want the value to go up, right? But if your dollar cost averaging into it with that amount of price, he still wants to buy more and get it at a cheaper price. When it came out that he bought it, I think the price went up 5-6%. So he is quite the market mover, that's for sure.
Yeah, that's definitely one of the reasons they hid it from the public.
Yeah, but it's still 9 months is a pretty long time for hiding it from the public. I think normally legally it's 3 months?
Yeah, 3 months, 1 quarter.
Yeah, that's it, 1 quarter. There was also Nvidia that reported earnings this week. So their revenue came out to $26 billion, which is up 260% year over year. Their EPS is at 6.12, which is up 560% year over year. It did declare a 10-to-1 stock split, so that'll come out in a few weeks. They had a record net income of 14.8 billion, which is up 600% year over year. They had record data center revenue at 19.4 billion, which is up 430% year over year. And yeah, it's been just killing it in a lot of their segments. Also, the gaming revenues have been pretty solid. Uh, it's a cash flowing machine. It's now the third biggest market cap valued company, if I'm not mistaken, behind Microsoft and Apple. What do you think about Nvidia?
I don't know. I have a feeling it's overvalued because it's a $2.7 trillion market cap, as you said, and it's the third largest company in America right now behind Apple and Microsoft. And their earnings is what, 40 billion net income? The PE makes it around to
Net
60.
income.
I mean, they would have to grow a lot to justify the price. I mean, they're doing a good job at growing really fast right now because of all their increased demand in the AI and their chips business. But don't forget the semiconductor business is very competitive. You have Intel trying to compete. You have AMD trying to compete from the other side. They're getting attacked from a lot of angles. I mean, they do have the edge right now because they're the number one guy. But I don't know how the price can justify itself. $2.7 trillion.
I I do think that they're having a lot of competition coming with Intel and AMD, as you said. But the thing with Nvidia as well is they help the customers integrate the system with them. It's not like they just sell the chip to them, which is something like Intel and AMD don't specialize in. So they'll really guide the customer, and they also sell a software to them. So they start charging like a monthly like they're gonna make monthly recurring revenue just with that. So they're gonna start selling a program to really enhance the help that they could bring to every company that try to integrate, like let's say Tesla trying to integrate into their cars. So they'll help them with that.
I mean, their net income growth was 50% year over year. Yeah, around 50%. Do you think like that's sustainable for the next years following? 50%.
Well, right now they've been compounding at an insane rate. Every quarter and every year, the past 2 years, you've been looking at Nvidia and they're like, okay, they're not gonna hit it this time. And not only that they do hit it, they blow it out of the water. The next quarter, the same thing. The next quarter, the same thing. I think this, if I'm not mistaken, it's a hypothetical here. I'm pretty sure that the revenue they made this quarter is more than the last 4 quarters combined. And at this pace, it's like next year it's gonna beat that one too. So, and they also came out saying that at the pace that they're growing, that they're expanding their own speed for AI chips, they say they're gonna have a new chip every year at this point. So you have the Blackwell that's coming out now, and they say they already have another chip planned for next year. Now, some people say, well, maybe the big tech companies are gonna slow down their investments on current chips and wait for the next gen chips that are gonna come out next year, the year after, and stuff like that, instead of buying the ones from this year. So he answered to that, we haven't seen a slow demand on it, and would you rather be first or second? So he really reiterated that. He said people are seeing cost-cutting measures by converting to AI and stuff like that. So we'll see. It's obviously taking the whole market by shock, and I think it's going to still be the talk of the stock market for the next probably year or two.
Yeah, the market definitely loves growth, but does it overvalue growth? Because growth is obviously an important factor in the valuation, but I think like you have to pay a certain price for it. I don't know if a 60p is justifiable on this company. Given what rates are right now, we should be getting higher yields too. Because rates are higher, the PE should be lower. You know what I mean? Earnings yield should be higher.
Imagine we have higher interest rates now, so imagine when they start cutting the rates as well. That'll just, well, the market is just waiting for that. So we used to price 7 cuts, then it went down to 1 cut, then we went up to 2 cuts, and now I think it's at 1.8 cut that's priced in. Oof. I know here in Canada we do need cuts because the way of our mortgages are structured. I think the U.S. is less pressured on doing cuts. The only thing I would say that they're pressured on is their debt. Their interest payments on their debt is gonna pass, I think it was this week, is gonna pass their defense spending. So they're gonna pay more in interest rates than they pay on their army spending. It's pretty
What is that, $800
crazy.
billion?
$800 billion, yeah.
Wow.
So that's not sustainable. That's just an insane number. I also saw that Live Nation and Ticketmaster are getting brought to court by the Justice Department because of just holding a monopoly on ticket prices and venues and stuff like that. If I'm not mistaken, Ticketmaster and Live Nation control approximately 80% of primary ticketing market for major concert venues. So, well, they've been getting a lot of hate from artists and from their fans because I think it was one of the Taylor Swift concerts that people were trying to get tickets and they were like at 600, 700, 800 for like no good seats. And I think it really came from that. It came out and so anyways, now there's 30 state and district attorneys that are gonna bring them to court in the Southern District of New York. So we'll see what happens with that. I think anything that's better for the consumer and that creates competition is pretty good. And we'll see what happens with that.
I would agree with that. I know, Danny, you're a big Taylor Swift fan, so you really want to see those prices drop just for you, you know?
Never call me a Taylor Swift fan again. You better call me a Swiftie. That's the right way of saying it, okay?
All right, so you think...
there's also... Yeah, go ahead.
No, you go ahead.
Indigo's... if you're old like me, we used to go to Indigo where there's a Starbucks inside as well to go pick up your books, your investment books, your whatever type of books you read. Well, they're going to be taken private by Trilogy Holding, which already held 56% of all the shares of the company, so they're going to own 100% of it. Hopefully they could do something different and make this place profitable. I used to like going there too, but they need to, I guess, change the vibe, get people to come in for not just books or overpriced items.
I think the book market have shifted to Amazon. I mean, they really took it over. You get 1-day delivery, and you get it with the click of the button from the comfort of your own home. You really can't beat it.
Yeah, that's you're right on that. I bought my last two, three books on Amazon. It's just perfect. You're about to finish a book, so let's say you finish your book tonight. You want to start reading another one tomorrow. Uh, you'll get it by Amazon right away. So
And you don't
yes,
have to
you're
go
right.
look for it in the aisle of the section 5,
Yeah.
whatever.
But you can see how it's rated. You can see which ones are selling the most. So let's say the books I've been reading recently, it's all about investment. So I bought Ray Dalio's Principles. Well, okay, that was one of the top in the category. I bought The Psychology of Money, which was one of the top books. So I read it. So it gives you an idea where it's at. If you go to Indigo, it's not going to tell you, okay, this is the best one. Plus, they got cyber attacked and their website was down for a big part of the year last year, so they've got some to be done, work to be done on that front as well. Hey guys, don't forget to click the links below to sign up on Wealthsimple and Questrade to start investing. You will get a free $25 and $50 sign up bonus with any deposit amount over $1. And also, don't forget to like and subscribe our podcast.
Yeah, I think this is a good point to kind of start our stock market battle and recap what happened in the last few months. Who's winning and what's the score? I know you're keeping track, so what's going on?
Okay, so in the stock battle recap, so we missed last week, so we're gonna have two that are ending this week. We have the DraftKings against GRBK. Drumroll, please. So I have lost the second concluded battle against Jonathan. Jonathan had GRBK at it ended up at 0.38%. I had DraftKings, which was down 1.21%. DraftKings had a big down week this week. I think it was down 6% or 7% this week on the news of them acquiring a new company. So I guess people didn't like the direction they were going with that acquisition. We also had Trex against Kratos. So Jonathan had Trex, I had Kratos, and for that, I win my first battle with Kratos, having a gain of 16.5%, unseen on the Standard and Rich podcast. This amazing growth. Thank you, no problem, no problem. And Trex was please, guys. Thank you. I appreciate it. Trex was down 0.45%. So the battle is now at 2-1 for Jonathan. We also were tracking PGR versus Brookfield. So that's coming to an end next week. PGR was down 4.69%. And Berkshire, sorry, is up 0.58%. And the last one we did was Hershey versus Savaria. So Hershey's down 6.11%, and Savaria's up 1.03%.
Wow, I'm getting crushed. So since you won the most recent one that we just locked in, how about you start off this week's stock pick?
So I'm gonna go with PDD. So PDD Holdings um, is the parent company of Pinduoduo, which is a Chinese company. You've probably seen ads for this because they're all over the place. I think they're really trying to, not they're trying to take market, but they're definitely trying to hurt Alibaba, that's for sure, and AliExpress. So they came out with her earnings this week showing nice growth. They had a 131% increase in revenue to $12 billion USD, which was above the estimates of the analysts at 10.65 billion. Even their EPS doubled the analyst expectations of 1.42. They were at 8.8, no, sorry, 2.83. Um, they're just they're all over the place. So I guess they're putting so much money in marketing and it's working, giving stuff for free. So I guess they're getting recurring customers. It's faster than what Wish used to be, which was like 3 weeks. This you'll probably get it in 1 week. Um, just the growth it's been having, the CAGR it's been having the past few years. Uh, and I think they'll keep going at it with Temu until I don't know if the US is going to try to do something to stop it. I wouldn't think so because it did put tariffs on electric vehicles. And that's it. The 10-year their 10-year CAGR is 21%, so you can't argue against a nice growth like that. Unfortunately, I can't buy it on Wealthsimple, but if you do go down below in our link, in our details, you could see a link to subscribe to Questrade, and on Questrade, you're allowed to buy PDD. And what stock are you choosing this week, Jonathan?
Let me just add one thing. When you sign up with Questrade, you get $50 free with sign up at any deposit amount. And let me just talk about PDD, your pick. Very good pick. I mean, I think this company is fantastic. It's a 19p ratio. It's perfectly priced, and I think it's a good buy. So let me get. So I have the big hurdle to overcome right now. I have to beat your stock pick, and you're already on a good start. So I'm picking Alibaba. I actually used to own this company before. I sold it a couple months back, but the price is very attractive, and all the numbers are very attractive. So I'm gonna run you really through like the business really quickly. So they obviously have their e-commerce platforms that we all know about: Alibaba.com, Taobao, Tmall, AliExpress. Those are like their main e-commerce businesses in China. Obviously, that's where most of their revenue is from. They also have like Amazon. They have Amazon has Amazon Cloud. Alibaba has Alibaba Cloud for China, and they're Chinese. I think they're the biggest cloud in China right now. So they have a lot of new businesses that they're starting. So their profits, they're not profitable in these companies yet, but they will soon be. Kind of like how Amazon has a lot of other businesses that they're just starting to be profitable, like AWS. Amazon Web Services is Amazon's biggest profit leader right now. So they're starting off Alibaba Cloud. I don't think it's profitable yet, but it definitely will be soon because it's the biggest in China. They also have the Uber of China, food delivery service. It's called Le.me. And they're basically like a spawner. They start a lot of new businesses. They have 33% of Ant Group, which is the biggest financial processor in China. It's Alipay. It's one of the biggest financial processors, and it was valued at $200 billion by JP Morgan, I think, recently. So it's a very valuable stake. 33% of that, it's around 33% of 200 billion, 60 billion around. So that adds already to their market cap. So let's talk about their market cap. So market cap, we're talking 200 billion. Now, just in cash alone, 90 billion just in cash with a 200. So they basically have half their market cap just sitting there in cash. Now let's talk about the cash flow statement. They generate 20 billion a year in free cash flow, and that's consistent over time. So that's a 10 price to free cash flow right there. And in a couple years, they're predicted to have their same market cap as they do in cash. That's how much the cash they're bringing in. They don't even know what to do with the money. So it's a very profitable company. They have a disgusting amount of cash, and they don't know what to do with it. And that's why they're doing a bunch of buybacks and dividends and returning it to the shareholders. I think the stock price is going to blow up once they start paying back more money to the shareholders. You have any last words to say about this stock, Danny?
Yeah, I know they've been doing a lot of stock buyback. I've seen their cash compared to market cap. I think there's so much tension with China and the US. I think a lot of people are scared to put their money in China. A bit with especially what we just went through with Russia and Ukraine, with everybody pulling out their investments, or let's say McDonald's exiting the market just like that. I don't know if the tensions go down between China and Taiwan. Uh, at the same time, I don't think it's a good time for China to do anything against Taiwan. I think they're doing they're doing bad financially with everything that's happening in their real estate. And for them to still have one of their companies like Alibaba and PDD doing so strong, I think they'll want to back them up and let them do what they do. So yeah, they're definitely underpriced, and we both went Chinese because they're underrated stocks right now. They've been bouncing back up, but they're still underrated compared to their peers.
Yeah, they're definitely undervalued, and there's definitely a good reason for that because of the Chinese tensions and the war. But if all goes well, it's a good investment. If it doesn't go well, that's the risky part. You're basically playing on the war gamble, and you can't really predict macro environments. You know.
It is the war gamble, but it's also the Chinese government itself. Like, if they want to seize all of Baba's assets, they could seize all of Baba's assets right away. So it's that uncertainty too. But at the same time, like I just said, with their economy not doing that well, I don't think they're going to do anything to hurt their businesses either.
It's definitely a high risk, high reward type of bet. You're not going to put your whole portfolio into this stock, but I think it's good to have a small percentage of it, just to have a bit of exposure, just to get the benefit if it pays out. You know what I mean?
Yeah, if you have a 2% exposure in Bitcoin, you can have a 2% exposure in Baba.
Yeah. So I think that's a good place to end it off. Any last words?
Yeah, so take a look at PCE this week for the US market. That'll show where it's less volatile than the CPI, so it really concentrates just on a few things. So that'll show where the intentions on the Fed is to cutting rates or raising rates. That's it. That's really the big thing this week.
All right, guys, that's the end of the
Anything
episode.
to add on that? Yeah.
Don't forget to subscribe, like, everything you can to boost our engagement. It's all good for the algorithm. We're trying to get more views, and we're trying to work our way up. So show this video to more people by liking and subscribing. Thank you, guys, and take care.
Before we go, a quick reminder. While we love discussing financial topics, we are not financial advisors. The information provided in this podcast is for educational and entertainment purposes only. Please consult with a qualified professional before making any financial decisions. Thanks for listening, and see you next time.